Welcome to my March stocks and shares portfolio update. In this video, we'll provide my usual monthly update of my InvestEngine stock and shares ISA portfolio. As always, we'll kick off by taking a look at how the markets have been performing over the past month. Then we'll bring up InvestEngine's app and take a look at my own portfolio's performance and how the ETFs I've invested in have been performing. And to finish off the video, we'll quickly go through my future plans for the portfolio in the next tax year. For those new to the channel, I plan on building a £100,000 portfolio in my stock and shares ISA account over the next 3 years. And I'm using this channel to document the journey with regular monthly portfolio updates. So let's kick off by taking a look at how the markets have been performing in the UK and US. And let's start with the US by taking a look at how the S&P 500 has been performing over the past month. We can see the S&P is up by 2.93% over the past month, and it's been particularly strong since the 15th of March. If we zoom out a little bit, we can see that the S&P has hit record highs again this month. And this year overall has been great, as the year-to-date gains for this year in the S&P 500 is 10.30%. If someone told me at the start of the year that before the end of March, the S&P 500 will have already gained 10.30%, I don't think I would have believed them, as this is really good performance. And the main reason for this good performance is of course associated with interest rate policy. This has been the driver of investment performance, market performance for a while now. And in March, the market reacted positively to signals that major central banks across the world remain on course to cut interest rates this year. A notable signal came from the Federal Reserve Chairman Jerome Powell midway through the month, when he indicated a preference to cut rates by 0.75 percentage point this year. This is good news for the market, as lower interest rates mean lower borrowing costs. And lower borrowing costs for companies is good news, as it allows them to use borrowing more sustainably as a mechanism to fund their growth. And if they grow quicker, companies' share price will also grow. And if this happens on a large basis in a whole market, then markets obviously will grow as well. So all of this, along with other factors such as AI hype and good earnings reports from many of the top companies in the US, has led to a very good run in the S&P. We're now up by more than 27% since a low in October. So overall, it's been a very good month in the US and a very good run more generally for the US stock market. It's been a similar story in the UK for the FTSE 100, as over the past month, the FTSE has also seen good growth. The FTSE 100 is up by 3.04% over the past month at the time of recording, and this is one of the rare occasions when I do these video updates where the FTSE 100 has beaten the S&P 500 in performance. So this shows it's been a real good month for performance. And the reason for the good performance is similar to the US, in that there's been positive signals from the Bank of England that they'll cut interest rates in the near future. For example, the Bank of England Governor Andrew Bailey stated this month that markets were right to expect more than one rate cut in the UK this year. And the reason Mr. Bailey is suggesting this is because inflation is getting closer to the Bank of England's target level of 2%. CPI inflation in the UK fell to 3.4% in February, down from 4% the previous month. So because inflation looks to be coming under control, the Bank of England is now more confident to talk about rate cuts, and that's the reason Mr. Bailey is coming out with statements like this. And investors more generally now fully expect rate cuts to happen this year. In fact, the implied probability of a first rate cut by June has risen to about 80%, up from 50% previously before we had the recent comments from the Bank of England and the recent inflation data. So the market has extremely positive sentiment at the moment about rate cuts. And another positive sign for this is that one major central bank cut rates this month. The Swiss National Bank became the first major central bank to start loosening their monetary policy this month when it cut interest rates by 0.25%. So this is another good sign, as central banks tend to follow one another. And overall, it's been a very good month for the UK in terms of performance, and also for the US in terms of stock market performance. So now we know it's been a good month for the stock market, let's bring up InvestEngine's app and take a look at my own portfolio's performance. We can see that over the past month, my portfolio is up by just over £600 in pound terms and 2.9% in percentage terms. So it's up by around the same percentage figure as the S&P 500 and the FTSE 100 over the past month. And I'm now sitting at a balance of £21,354.84. And we can use the graph below here to see the exact performance over the past month. So we can see at the start of the month, I was sitting at a balance of around 18.25k, and then at the moment, at the end of the month, end of March, I'm now sitting at a balance of around 21.35k. And in order to achieve that jump, It's made up of contributions, of course, mainly contributions. I contributed 2.5k this month, but it's also made up of investment growth of £600. So overall, it's been a good month in terms of performance, as I've seen a big jump in terms of my portfolio value. If we zoom out now using this toggle to go from the last month performance to the maximum time allowed from InvestEngine here, we can see my portfolio, since I started this portfolio, is now up by nearly 15%. And this is not including the dividends I've also received in this portfolio, which is over £100. So the portfolio value has been steadily increasing. And although it's quite small, we can see that over the past few months particularly, the portfolio value has been increasing as per the general market, as we've been on a real good run in the S&P 500, and particularly in America more generally. There's been great performance over the past few months. So overall, it's been a good month for my portfolio, a good month for the overall stock market. And now we know the overall performance of the portfolio, let's take a look at how the individual ETFs have been performing over the past month. And let's start off as always by taking a look at how my global ETF has been performing. My global ETF is the HSBC MSCI World, and this makes up nearly 70% of my portfolio. So the majority of my portfolio pretty much is this ETF. And we can see that this is up by 3.06%. And this is not too surprising, given that this ETF just mainly follows market trends, and the market in America and also in the UK is up around the 3% mark. So it's not too surprising that this fund is also up by 3%. The next fund in my portfolio is the iShares MSCI World Small Cap, and this is up by 3.56%. So this has had better performance than my global ETF. And this is also not too surprising that this fund has done well, as small caps particularly benefit from lower interest rates. So the expectation of rate cuts this year will be of particular benefit to small caps. And I was probably actually expecting a little bit more growth here, but nonetheless, I'm still happy with 3.56%. If we move on to the next ETF, the iShares MSCI Emerging Markets, this is also in the green, it's up by 1.2%, so still good performance, but not as good as the other two ETFs we've gone through so far. The next ETF is my passion sector ETF in WisdomTree's Cloud Computing Fund. And this fund is actually in the red over the past month. It's marginally down, it's down by 0.66%. And I'm not too worried that this ETF is in the red this month, as it's been on a good run over the past 6 months, the past year. If we click on it and look at the 6-month view, we can see over the last 6 months, it's up by nearly 16%. So I'm not too worried about 1 month, as overall the bigger picture is that this ETF has still been performing well over the past 6 months, and I very much have a long-term plan to keep investing in this ETF for the next 5-10 years. The final ETF, the final fund in my portfolio, is the iShares Physical Gold Fund, and this is the best performing fund in my portfolio. It's up by 7.32%, so it's up over double the next best performing fund in the portfolio, which is great performance. So overall, it's been steady good performance for most of the ETFs in my portfolio, with the exception of the WisdomTree Cloud Computing Fund, which is marginally down, and on the other end of the scale, the Gold Fund, which has seen very good performance, much better than the rest of the funds in this portfolio. And if we now take a look at how these funds have performed since I started investing in them, and go onto the max toggle here, we can see that both the HSBC MSCI World and WisdomTree Cloud Computing Funds are both up by over 20% since I started investing in them. The iShares MSCI World Small Cap is up over 11%, and the iShares Physical Gold Fund is up by over 14%. So good performance from these 4 funds. The iShares MSCI Emerging Markets Fund is trading a little bit, it is slacking, it's only up by 3.75% since I started investing in them, which is significantly less than the rest of the funds. However, it's been a tough couple of years for the emerging markets, with geopolitical tensions happening and also the high interest rate environment. I'm still confident that over the next 5-10 years, we'll see good performance from the emerging markets when we return to a bit of stability in terms of political relations, and also when we return to a low interest rate environment. But overall, I hope this performance continues. We've been on a good run as we went through earlier, especially since October, so let's hope that continues for the rest of the year. In terms of my future plans for this portfolio, my plans for the next IC year, I plan on doing much of the same. I plan on investing in the same ETFs. I don't see my portfolio changing too much. I may change one ETF, but that's it. And I also plan on investing the same amount every month. I plan on investing $1,500 every month into this portfolio, as I have been doing the last few months. And I also plan on using InvestEngine again for my stock and shares ISA. So it's much of the same for the next IC year, and I'm hopeful to follow this plan and invest $1,500 every month for the next year. So let's hope we carry on getting good performance. And if you want to see my own thoughts on where the market will go the rest of this year, I have a video around here. But for this video, thanks for watching.